So here we're talking about putting a hard cap limit on digital property in the universe for all time. That's even much better than 21 million for the next 100 years or until, the administration changes.
Hello everyone and welcome to the Daily Crypto. We are back with yet another video, and this time we have Michael Saylor with us. But before we can listen to what he has to say, let's take a quick look at the Fear and Greed Index for today. As of recording this video, it is sitting at 22, slightly lower than yesterday's 22. Currently Bitcoin and Ethereum are trading for 19,250 and 1,334 respectively. With that being said, let's continue with the interview.
I tweeted this morning that Bitcoin is property. And I think a lot of people are getting the idea that Bitcoin is really technology to manifest property rights to 8 billion people. But if we look at Bitcoin as perfected property or engineered property, that thing which you would need to provide to an individual so that they would have property rights, then I think that's an ideal metaphor. I think a lot of people have talked about it as a currency, and we've discussed other metaphors for it. But probably the most constructive thing to do is to compare Bitcoin to other forms of property and other assets to deliver property rights to individuals.
Bitcoin is the ultimate revolution in terms of asset ownership. It has started a new era where people are more aware than ever to take full ownership and authority over the assets they own. Since it is decentralized, there is no middleman or a third party that can take over your assets without any warning, like banks and lenders. Michael believes this is the future and the only way to move forward.
In the absence of sound money, if fiat currency or the currency of any given society is not holding its purchasing power, then rational actors, be they corporations or individual investors or families, will tend to take their weak currency or their weakening currency, and they will want to invest it in some stronger asset that'll be a store of value. And so if we look at the United States, the S&P index has emerged as a store of value. There was a time when you could actually take your cash, put it in a bank account, and generate 5% interest. And if you thought you were getting 5% interest and the natural inflation rate was less, then you would do that. Most people concluded that that wasn't good enough, and they actually became stock market investors or real estate investors. But there was a debate about what the inflation rate is. And so if you roll the clock back 30 years, some people, less sophisticated, would have put their money in a savings account. Other mid-sophisticated would have put their money in a mutual fund. And I'd say the highly sophisticated put their money in commercial real estate or real estate ventures. And the reason they put them in real estate ventures is because real estate offered greater property rights and greater leverage. You could lever real estate 5-to-1, 10-to-1, and more readily finance it without a mark-to-market.
Before Bitcoin, some investors were happy with the 5% interest payout in a savings account, while the more rational investors put their money into stocks and real estate. The most successful of them were those who invested into commercial real estate because they could not only leverage their money, but also take actual ownership of the asset.
Bitcoin, right, is one of those assets which is now being monetized, and it is rising through this chaos to be the apex property asset or the apex monetizing asset. So I'm of the opinion that we're going to see a consistent demonetization of other key assets, and one asset that you'll see demonetized, that we're seeing demonetized right now, is bonds. I mean, I guess the big three category, right, are maybe the big four: currency, bonds, real estate, and equity. Right? Those are the four big asset classes that have been monetized by excessive money printing. we see, and gold is a small one, right? Gold is 10 trillion. All the other four are 10x more than that. So the big four are the currencies, the bonds, the equities, and the real estate. They're starting to be demonetized now.
Because of the excessive money printing, we saw many asset classes go up in value like stocks, equities, and commodities. But the one that stood out the most was Bitcoin, as it grew organically as people started to wake up and realize that the current financial system is extremely broken and it needs to be fixed. The simple answer to all these problems is Bitcoin.
So if you actually could get the universe to agree that there'll never be more than 21 million blocks of perfect property, that's the icing on the cake, right? When I did everything else, I created digital property, but when I capped it at 21 million blocks, I made it digital scarcity, or the ultimate scarce property. It's what happens to property values when the city passes a law saying that no one can develop any more real estate. You cannot build any more buildings, or you can't build a building more than 10 floors forever in city limits. When you put a restriction on the property development, it drives up the value of all the property within the city dramatically. So here we're talking about putting a hard cap limit on digital property in the universe for all time. That's even much better than 21 million for the next 100 years, or until, the administration changes or someone passes a law, or 21 million, but only until the United States of America ceases to be a nation state. That's not quite as good as 21 million forever.
Since there will only be 21 million Bitcoin in existence, it is extremely scarce, and its value will continue to increase over time as more and more people decide to add some to their portfolios. Unlike the US dollar, it is deflationary in nature and will not get debased. This is why Michael Saylor thinks Bitcoin is the ultimate digital asset.
And look at what happened to luxury hotels and luxury houses in Cuba with the rise of Castro, right? It kind of peaked in 1960, and then for the next 60 years, all those properties decayed gradually, and another 40 or 50 years, whatever beauty or value that was there is gone, because they haven't maintained them, and they can't maintain them. At least not without fixing the other economic ills. And Bitcoin is the opposite of that. Whereas commercial real estate peaked, as for when it peaked at different points in different jurisdictions over the last 100 years. Bitcoin is now just beginning to come into its prime. And every time a new Lightning wallet is shipped, Bitcoin is upgraded. And every time a new layer 3 app is created, Bitcoin is upgraded. And every time a new miner comes online, Bitcoin is upgraded. And every time a new regulatory guideline is laid out, Bitcoin is upgraded. So Bitcoin is just continuing to improve its property. Real estate is continuing to decay as property.
Michael gives us the example of how the luxury property bubble burst in Cuba. It was a wild rally which eventually ended and left hundreds of luxury real estate properties out to decay. This isn't the case with Bitcoin, as it continues to get better with every passing day as more people embrace it and add to the network.
The only reason that a casual investor wouldn't start to shift their allocation of savings from commercial real estate to Bitcoin is they don't understand Bitcoin, right? Most of them, if you walked up to the typical real estate investor and say, quick, give me the 18 crippling defects in your real estate, they couldn't name the 18 things I just laid out to you. And you know what? I couldn't either before I knew Bitcoin. You don't understand the defects in your property until you see perfect synthetic property or digital property. Just like you don't understand the defects in your currency until you see perfect currency. If you don't understand Bitcoin, you don't know what's wrong with gold, right? And you don't understand what's wrong with fiat currency, really, until you understand what's right about Bitcoin. And I think the same is true with property holders. They don't understand what's wrong with their investment until they understand what perfection looks like. And most of them, when they hear Bitcoin, they just are afraid. You know, their reaction is just, oh, it's scary. I'm afraid. I don't know much about it. It's too volatile. And their brain shuts off, and that's like as far as it goes. So as we educate the population on Bitcoin, I think people start to create tables of the 10 defects in real estate versus Bitcoin. And then you go, wow, the only thing not to like about Bitcoin is it's new and volatile.
Michael Saylor says that the only reason why real estate investors aren't shifting to Bitcoin is because they don't fully understand what it really is and the wonders it can do. If they understood what Bitcoin can do, they would invest in it without any second thoughts. Thank you for watching this video. Please drop a like and subscribe to our channel so you can keep watching informational videos like this on a daily basis. See you guys in the next one.